start recording, and I'm going to start the broadcast in 5, 4, 3, 2, 1, and have fun, Eva, okay?
Thanks.
All right, let's go.
The broadcast is now starting. All attendees are in listen-only mode.
Hello. Good day, everyone, and welcome to this webinar on handling inventory control and costing with industrials. My name is Jacques Descaries. I'm Vice President of Sales and Marketing at Industrial Software, and I'm joined on this call today by my colleague Eva de Gasperis. Eva is one of the owners of Industrial Software, and her main role here, of course, many of you know Eva, is that of Senior Vice President of Professional Services and Practices. And well, given that today's subject matter is inventory, and Eva is definitely a subject matter expert and leader in our group over here, Eva will be handling most of the material we're presenting today. Also joining us on the call today, in spite of our best efforts, is Ellie, the cartoon character that you're going to see in a second, of course, because I need to move my slides forward. So Ellie's the cartoon character on the top right-hand corner of the screen. Ellie stands for excessive, late, lost, and inefficient. And she represents everything that can go wrong when good inventory practices are not present. So please note that any physical resemblance between Ellie or Eva are purely and 100% intentional and entirely within the control of the marketing department. So, okay, so to set the stage for the presentation, we have a couple of housekeeping items. First of all, you are muted, but we do want to hear from you and allow you to ask questions. So to that end, if you notice on your GoToWebinar control panel, you have a questions tab. Please feel free at any time during the presentation to log your questions on the questions tab. I'll be monitoring it as we go along and answering them as appropriate. And of course, keep in mind, if your questions are deemed of a general nature, we may choose to use them to fuel the question period at the end of our session. The second housekeeping item is on the same GoToWebinar control panel. There's a section called handouts, and you can use this at any time during the session to download handouts. There are two handouts available. The first one is a copy of the Industrials version 3.6 release notes, and the other one is our Invisible Factory white paper. So please help yourselves. Okay, so our agenda for today, Eva is going to start talking about how control starts with definition, then move on to a subject about tracking what matters, and then discuss cost elements, valuation methods, and that section is going to be followed by questions, and we'll wrap it up with just a quick look at 2017 online events that we've had and those that are upcoming. So at this point, Eva, I'd like to turn things over to you, and you can take it from here.
Wonderful, and thank you, Jacques. Good day to everyone, and thank you for joining our discussion on inventory control and costing. As manufacturers and distributors, inventory is at the center of all we do and key to being able to satisfy our customers' demand. In preparing for the discussion today, we considered the vast number of topics and issues that fall under the management of inventory and thought the best way to start our session is with a clear definition of what inventory control is. And we define it as the coordination and identification of supply, the recording of transactions and quantities, and balancing of demand and supply to minimize the ending balance. Sounds straightforward, right? So why so challenging? Well, our experience has shown us that systems and processes involving inventory generally perform at less than optimal levels when there isn't a balance between clearly identifying your inventory, knowing the key points in the workflow to track, and measuring performance to ensure you are in control. Today, we will explore key considerations in defining inventory, tracking and measuring performance, and how Industrios supports you in these activities. So let's get started as we learn why all roads really do lead to inventory. The first section we're going to discuss supports the coordination and identification, which all begins with clear definition of inventory. At a high level, we're going to focus around item attributes and their role in reporting and transaction definition, a discussion on vendors versus manufacturers, and quantity constraints and the impact on planning and reporting. Jacques, would you move to the next slide, please? So if control starts with definition, what is it we want to define? Well, we want to ensure that we have a clear understanding of what we buy and sell. So how are we going to achieve that? The first step is defining our framework, which would include a hierarchy of considerations in terms of types, classification keys, and statuses. We also have to really understand how we plan our supply and who's going to be responsible as we start configuring the item. Do we have a need to be clear on our vendor requirements versus manufacturer details? How are we going to know we received what we should? And what about quantity constraints? How can we minimize the just because quantities and ensure that our suggestions help us manage and minimize any excess, inventory, and obsolescence? So let's explore how Industrios is going to help us with this definition setting. Can you move to the next slide, Jacques? So we're going to begin with our framework of item classification. Item definition and classification ensures that when we look at a given item or group of items, we've got like attributes that help us when we're reviewing activity, valuation, planning. Oh, can you go back, Jacques? Thanks. Through the system. So typically in Industrios, we would start at the top of the pyramid with an identification of types. By grouping into natural types, we can then start understanding the attributes that relate to those types and how we wish to restrict them as we're creating items, so we're design proofing. As part of the Industrios structure, we have a host of capabilities as it relates to classification and definition. We're going to explore a couple of the key attributes that are going to help us manage the design proof the creation of items, and highlight a few new capabilities available in the software to augment classification that you may already have in place. So let's take a look at the screen. Next slide, please. So this slide, we are parked on the item type maintenance screen. And this screen allows us to define that top level pyramid, but more importantly, helps us determine the classification, planning, costing, and stocking attributes related to those types of, to the items that will be included in that type group. We're going to talk about each of these areas briefly. From a classification perspective, we have introduced 3 new user classification tables, which are controlled through application settings and allow you to name the fields to support your business. Within these groupings, whether it be commodity, product, or any of the new classifications, you are able to control which values are applicable to that type of item, giving you some control and design proofing over the creation of parts so that you can rely on the reporting and analysis as transactions are performed. Understand the planning, as I alluded to in the introduction, helps us know how we're going to plan for supply. Those attributes are really important when we're trying to configure and assess excess, inventory, obsolescence, turns, etc., so that we can relate the right measures to the right type of inventory. Costing helps us understand the values that are going to flow through the system and how we're going to focus on the elements that support those values. Last but not least, and near and dear to my heart, is stocking units of measure. And we're going to review the importance of that as we move through the presentation. Most importantly in the stocking section is the ability to define and associate the locations that are applicable to these types of items. Again, design proofing and helping us control the analysis and reporting. This one screen is invaluable to the structure and sets the tone for the hierarchy you're going to create. Next step, next slide. Where does this all come together is on the Item Master, Item Details tab. This tab is a comprehensive description of the items that you're managing in your inventory. All of the elements from classification through to planning are contained on this one tab. A well-defined item detail tab will go a long way to support transaction processing, reporting, and analysis. Next slide, please. Vendors versus manufacturers. As part of the item definition, we will often face in inventory the need or specification for specific manufacturers on our drawings, on our specifications from clients. And we need to be able to ensure that we're identifying those and all of the constraints related to those vendors and the manufacturers. I might have, for example, the need for a Black & Decker drill, and I can buy that drill from Home Depot, Home Hardware, Rona. I can choose any of those vendors, but I must be specified for that manufacturer. That clarity is key to ensure we're complying with quality and contract review requirements, and that there's a clear identification from purchasing through receiving through to inventory control. As part of the update, we're going to explore some new functionality related to manufacturers. So if you could go to the next slide, please. So from the screen on the Item Master file, on the Purchasing Details tab, when we have the Advanced Manufacturers functionality enabled, we're going to have visibility to the approved manufacturer, and we're going to be able to control for that particular item whether or not manufacturers need to be specified and rules around the specification. With that enabled, we will be able to record one or more manufacturers that can satisfy the needs, how long they're approved for, and their priority in the selection criteria. Combined with the lead times and at the vendor level, we would be able to see the requirements from MRP all the way through the requisition. So this new functionality does provide the opportunity to allow design responsible resources or engineering to record specific manufacturing information related to the item. The ability to restrict procurement to only purchase from approved vendors and only those that provide the exact manufacturing item is also available. Procurement can then define how pricing, etc., must be applied at the purchase order level. This vendor association with the manufactured item also allows procurement to define the relationship between potential distributors or agents selling components and the OEM. Here, this functionality improves on the list of vendors associated with each location and supports the approved QA vendor list requirements in any organization. Next slide, please. Quantity constraints. Constraints defined relative to a given item location helps us from two perspectives. One, at the inventory level, and two, in terms of batch sizing. At the inventory level, the types of considerations that we would be managing include minimum stocks, reorder points, reorder quantities. Batch sizes augment them to control how the requisitions or how the jobs are going to be suggested so they match optimal batching and or vendor requirements for batch sizes. We're going to take a look at those constraints in a little more detail and highlight one of the new features related to reorder point. If you could go to the next slide, please. From the item location tab, you'll see outlined in red the key elements that control stocking constraints. So typical thinking about stocking constraints relates to setting some min levels so that the system will prompt us to reorder or replenish through production. Again, the importance of understanding this need helps us ensure that we've got the order policy set to a consistent measure related to our need to stock at the minimum level. It also is a flag to help us as we move downstream to reporting and analysis for those items that we do plan to stock so that we can be monitoring and ensuring we're not going too far over the min or max levels that have been predefined. The addition of the minimum order quantity and order quantity multiple at the item location, item supplier, and item supplier manufacturer provides the flexibility to record constraints at the item master level that best suit planning requirements. When combined with our inventory activity analysis that now supports the calculation of average consumption, it will be used in the calculation of either a minimum stock or a reorder point that allows planning and procurement to set levels of inventory to trigger actions for material planning. Big long story is we want to ensure that we're triggering at the right level to support the trends in inventory consumption. Traditional MRP does not include reorder point logic, as its more time-phased demand provides information to trigger replenishment. However, in environments where future planning is dependent on the forecast demand or historical transactions, the addition of reorder point can provide valuable information to procurement when negotiating with potential suppliers or trying to establish procurement contracts. So this gives us a different view and then a simple min trigger. The reorder point logic is one that I'm sure many of you will take interest in as you look at environment updates. Next slide, please. How does this all come together? How do we monitor all of this good information that we've established as benchmarks on the item location? Well, the inventory activity analysis tool found in the inventory control module provides us with the ability to take advantage of the great definition we did on our item master to pull like items together with like policies so that we can then begin understanding the trends in terms of purchases, production, sales, consumption, adjustments, and understand the impact of turns, min stock levels, target values, so that we can start managing and looking for issues with one or more items that needs corrective action. This tool also provides us with fantastic insight into excess inventory and slow-moving inventory so that, again, the appropriate corrective actions can be put into place. Next slide, please. Now that we've done this awesome job of classifying and really understanding our items, we have to think about how we're going to track them. And what are we going to track? So now that we have this clarity, we need to determine what we're going to track. Matching the physical flow of your goods to the configuration of the system is critical to ensure the right level of tracking occurs at the right time to support control over quantities needed for planning and commitments to your customers. Now, don't get me wrong. The financial considerations of inventory are important. However, experience shows if you can't track the units, you aren't likely to be able to track the dollars. In this section, we're going to review the key success factors in defining how to track what matters. We're going to focus around subjects as unit of measure, where inventory is located, the nature of inventory, and sustainment measures. Next slide. Tracking what matters. This is really important in order to ensure that we're receiving and relieving inventory correctly so that we have good on-hand quantities to support planning and commitments to the customer. So we have to be clear on what units of measure are. We have to understand so that we're properly defining BOMs and transactions supporting inventory, purchasing, and selling. Most importantly, we have to know where these goods are. How are we identifying them? How are we flowing them? How are we controlling the release to the floor? What are we expecting at any one point in these zones in our inventory? How are mobile scanners going to help us improve the efficiency in terms of tracking information? What's needed? How are we going to identify to support those that automation? We're going to take a look at understanding how we can better reserve and understand where inventory is specific to a job. From time to time, we're going to have the need to report scrap and rejects. How best to handle that, and what kind of information are we going to receive? Physical counts are very important, but a full count does not give us an assurance of ongoing accuracy. Understanding how to structure your cycle count and its frequency is critical to the ongoing sustainment and validation of that your process is in control. Last but not least, how are we going to measure and provide visibility to the targets that we've established and communicate to our employees so that they understand what they're tracking really does matter? So let's now explore some of the software elements that support these considerations. Next slide, please. Units of measure. As many of you who know me well, units of measure are near and dear to my heart. And yes, you cannot have half and each. Clarity in what I'm measuring, what I'm tracking, what does each mean, what does piece mean? Is this a set? How many is in a set? All of those elements are really important to ensure accuracy in inventory transactions and therefore the following of the related costs. Stocking unit of measure is our benchmark. It supports the lowest common denominator, which is the use on a bill of material. From there, we have fantastic capabilities within the software to allow us to support multiple units of conversion as it relates to inventory transactions, purchasing, selling, and manufacturing. Recent enhancements allow us to support some additional capabilities around selling, and we're going to look at those feature sets in a moment. One of the key things is, again, making sure your staff are able to easily record what they're receiving, what they're counting. For example, in an inventory setting, if I use in feet and stock in rolls, when it comes to moving inventory, counting inventory, issuing inventory, I can do it in terms of a roll, which makes it much easier to count and validate than trying to do the math to figure out the number of feet I need to record in the system. Next slide, Jacques. So one of the latest enhancements to the application is found on the Selling Details tab of the Item Master. On this tab, highlighted in yellow, you will note that we are now able to define a minimum order quantity and a quantity multiple that supports this sales order workbench screen. Staff responsible for recording orders will now have prompts to ensure that they are placing orders based on minimum quantities. So in this case, this item, you must buy a minimum of 2. And to ensure the multiple is clear. In this example, I must buy in multiples of 2, which means I can't buy 5, I can't buy 7, I can buy 2, 4, 6, 8. This gives us a lot of control at the order entry and again helps us flow down through shipping and relief of the appropriate inventory quantities. Next slide. Locations, bins, and reservations. Where are you, part number 1, 2, 3? We have to be really clear in understanding where our inventory is. Lots of hours are wasted in manufacturing searching for inventory that I knew I saw yesterday. Being clear on how you're designing your zones where inventory is going to go and the purpose of the zones to support the flow of transactions is critical. When we're procuring inventory and the item is common across many things that we buy, we have the ability, as many of you know, on the purchase order line to buy it to the job, referencing the job. It's a material line type. But we want it to stay in inventory until it's issued. Well, once it's received, that visibility is lost. With bin reservation capabilities, it allows us to see, even though I've got 100 on hand, 20 are for job 7, 80 are for job 94. So that gives us clarity as to which production orders that inventory has been reserved for. Better than that, the system then will ensure that that inventory from a planning perspective is reserved for that item regardless of the time phasing of when that's going to be needed. So that gives us tremendous power in planning. We do have flexibility that gives us the ability to unreserve and issue to another job as needed. The benefit there is now we have the proper flag to know which job we need to now go out and secure supply for again because we issued it to another one. So that visibility for anyone who's concerned about job level allocations, this is a definite feature for you. Labels, labels, labels. We need the ability to clearly identify the parts that we are managing. And there are many standard sources within industrials that support the label generation. This is critical for anyone who wants to take advantage of the scanning and mobile techniques. You need to have the labels in place, right size, easy accessible, and most importantly, tested to ensure that the barcodes are scanning. Next slide. This is an example of the visibility to the reserved inventory from bin content inquiry. This screen allows us to see online. We can range by the specific job, master job, generate reports, and reserve and unreserve inventory as needed. Very powerful tool. Next slide. Inventory transactions. How are we going to communicate that we need to move inventory out of controlled areas to the line? How are we going to record that? And how are we going to define when things don't go quite right? Within the software, we have the ability to use pick tickets for specific jobs, a pick ticket for a bunch of jobs consolidated, or a bulk bin replenishment. So a signal, again, using quantity constraints that I now need to move out of a controlled area and back to the replenishment. How are these moves actually done? Well, we can do them manually through an inventory move screen in the software. We can do it through material transaction entry at the job, sequence, or individual item. We can do this from shop floor terminals. We can do it from the office, and we can do this from mobile units. Multiple ways depending on our organization and where we're going to record this transaction. How close to the source can we get? However, things go wrong sometimes, and things get broken, and we have to scrap. One of the challenges in the past has been our ability to record scrap at the right level in the process. We previously could scrap an item, so material pulled to the job, or we could scrap quantities at the end of the job. While it was in process, a little more challenging. We've now have the ability to do a sequence reject, which is going to provide us insight into continuous improvement and corrective action opportunities, as well as greatly improve costing. So let's take a look at the screen supporting rejects. Next slide, Jacques. So from material transaction entry, when the ability to record sequence reject is enabled under your permissions, you're going to see a transaction type called sequence reject. And this is going to allow the user, again, either from shop floor or from the core system screens, to be able to select a given job, add a given sequence, and say the number of units that he or she is rejecting at that sequence. It will have the effect of rolling up the cost up to that sequence for those units and recording the accounting entries appropriately into the inventory distribution. That helps us from the finance perspective. Now we have the ability to have some good analytical information on the operational side of things. Let's take a look at the core report, Jacques, if you'd move forward, please. The scrap material and reject finished goods report provides us with tremendous insight to the costs and quantities that are rejected throughout our operational process. This standard report provides us with the ability to do multiple sort levels to support different analysis depending on the problem we're trying to solve. We can analyze based on item classification criteria, so we can start understanding if certain types or groupings of items are causing us more problems than not. Cost center work centers, are there specific areas in manufacturing that are starting to be more prone to scrap and rejects than we previously thought? And employee criteria. Are there specific employees, types of resources, departments where we're having a little more problem with scrap and it might warrant some retraining efforts? So this really provides a cross-functional view, not just manufacturing, but operational. Next slide, please. Now that you've done all this wonderful tracking, you've received, you've moved, you've issued to jobs, now we've got to measure it and determine if we're doing a good job or not. So how are we going to do that? Well, there's a series of tools that will help us. One is developing a good cycle count program. Again, those of you that know me well know that I am a big believer in practicing concepts of statistical process control as it relates to inventory. You only want to count as frequently as needed to determine that you are in control. Otherwise, to me, cycle counting is deemed a non-value-added activity. If we structure it correctly, it should allow us to monitor and measure the right frequency in the right zones. So again, we have to understand the zones and what their purposes are so we can match up the right frequency and monitor that to ensure that we're staying within that control range. If we fall out of that range, we need to increase the frequency so we can get back on track. Using the Industrial's Physical Count module provides us a great tool to do that. Also understanding our inventory levels. How are we doing with respect to our benchmarks? Our inventory activity analysis report, as we saw earlier on, provides us with great insights into the level management in terms of excess, slow moving, where are we against mins and maxes. KPIs, so key performance indicators, are another great way to monitor and communicate performance in areas such as how are we doing on turns, the aging of inventory, our accuracy. How are we going to accomplish that? Well, our plant gauge module is a great tool to help us with that. Next slide, Jacques, please. The plant gauge module allows us to take our measures and start establishing KPIs or statistics to help us understand how we're doing, where's our accuracy level, monitor trends, and be able to drill to the supporting details so we can understand where things may have gone awry. This allows us to have great visibility and communicate to our team on the floor so that they understand that what they're tracking really does matter and impacts our performance. Another great use of the plant gauge tool, if you see at the bottom of the screen, is a very quick and dirty flow chart, if you will. But we can build more complexity and model through flows that need to be followed. And this is really helpful, especially if things aren't done every day. It helps us ensure that the steps are completed in the order that they're needed. Right from this screen, I could click and drill and I get right to the generate snapshot or where I need to enter counts. So it's a great teaching tool as well. Next slide, please. Okay, so you've defined your items. You've now ensured that everybody's tracking what they should. Now we need to think about the dollars and the methods and how we're going to pull this all together. So let's take a look at the next slide, Jacques. So with our quantities under control, the next step is to determine the method that will be applied for unit costs. And our methods available to us include a standard cost model, average, FIFO, and for those that use custom or configured items, actual applies quite nicely for those top-level manufactured items. How the methods are defined and which ones you choose are as unique as the items being produced. And really the focus should align with management reporting needs and financial statement policies. So you aren't bound to just have one method across the board. You want the methods to match to help you manage. Again, going back to clear identification and definition of your items. So what are considerations, however, from us that we need as we're looking at different types of items? And I've broken them into two primary groups, purchased and make. So when we're dealing with purchased items, we want to have consideration for landed costs and where we're supplying material for those items that are going to come back to us. Make items, we're interested in overhead. So how are we going to drive overhead? Are we interested in fixed and variable? Are we configured that way at the chart to make it meaningful? Is overhead driven by material value? How are we going to apply labor? Do we want to use actual or some form of a standard when we're looking at our jobs? So let's take a look at some of the screens supporting this. Next slide, Jacques. Landed costs. In industrials, we have the capability to define cost elements on a purchased item, and we refer to it as cost elements, which are user-defined and allow us to identify the criteria and the relationship of that add-on, if you will, to the item. This supports not just a standard model, but also FIFO and average. In a standard model, it nicely supports how we come up with a standard cost. It does fully consider foreign currency when we're in standard and gives us visibility to truly the purchase price variance relative to the material versus foreign currency. So this really gives us the ability to manage and understand the cost from a purchase perspective without inflating, so we get to see the real unit cost separated from these landed cost values, making the transaction reporting quite simple. Next slide, please. One of the newest additions to the feature set in industrials is our ability to identify a planning type called contract purchase. We have always had the ability to define a subcontract sequence. That sequence in the manufacturing routing was used to identify steps in the process that were going to be performed by outside vendor. So for example, you might be cutting, bending, welding, and then sending it out for heat treating to come back and be finished before going into inventory or shipped to your customer. But what about when you're buying something from a fabricator and you're sending some or all of the bill of material? Well, that now adds a layer of complexity to that transaction because it's really not a job, but that was the only way to convert the material and the cost from that fabricator into the finished item. Well, with contract purchase, we have the ability to control what's called a purchase BOM, which allows us then to buy the item from the vendor, have a BOM associated with it, so at the time I receive, the BOM quantities are relieved, and that full value rolls up into the part that's going into inventory, while preserving the cost being paid to the vendor for the service of fabricating, assembling, etc. Let's take a look at the next slide at the purchase BOM screen. The purchase BOM screen allows us to define the item and the BOM associated with the item. The items on the bill of material can be supplied from internal stock, so shipped from your internal inventory with complete integration to the shipping workbench to allow you to prepare paperwork, etc., and track the shipment out to the vendor. Or it can be drop shipped from other vendors to the assembler and relieved and planned from that perspective. Very powerful tool. We're seeing more and more requirements for this as clients are either using offshore and supplying material, or fabricators with where material is being supplied to them to perform the tasks. So anyone who issues material and then gets a product back might be interested in learning more about the purchase BOM, or the contract purchase feature, and its integration with materials planning and inventory control. Next slide, please. Costing. At the work center level, we have the ability to define the fixed and the variable rate. So we have insight into that from an applied perspective in the general ledger. Key here is ensuring that your chart of accounts and your financial statements, your operational statements, are aligned to support the analysis. It's meant to give you an indication of how well you're absorbing relative to the assumptions that you're making. Next slide. Material overhead. So this one is relatively speaking new, and I think might be of interest to several in the crowd. This allows us to associate an overhead rate on material consumed on the job. It doesn't stop us from using traditional manufacturing overhead rates associated with time. It can be used in conjunction, or you can do all of your overhead allocation based on material values. To enable this feature, you turn this on through the production control application setup option, as highlighted below. The key here is that it's associated with the WIP class, which means we go back to the beginning and ensure that we clearly understand how our items are defined, which ones are going to get consumed on a job, and how we want that overhead to be triggered, so that we have enough granularity and the appropriate assignment at the item location level. Next slide, please. Charge rates. At the resource level, on the costing tab, you will see that you have the ability to indicate whether or not the dollar value associated with the labor resource, whether that's going to come from the employee actual rates or from a standard. Pros and cons related to this is if you do not want to have any variation because of who did the work in terms of dollars, this will give you the capability to do that, and you can manage the variances at the GL level. If there's sensitivity to seeing such rates on the job cost reports, again, this is another way of controlling that variation to a more standard level. And that's controlled resource ID by resource ID. Next slide, please. So now we've determined where the money is going to be. How are the rates going to be applied? How are we going to value what we buy, apply more overheads to it? We've nailed all of that. Now what do? How do we make sense of all of this? Well, we do have the ability to review and relate cost trends relative to the nature or type of item using any one of the following techniques. So we've got the purchase price analysis tool, the manufacturing cost analysis tool, which focuses on time and consumption, very strong gross profit reporting and analysis, and of course, financial statement absorption analysis. So this is now marrying up the operational information to your financial reports and getting them configured, not just from a banking approach, but from an operational approach. As a result of all of this great analysis, when assumptions need to change or need to be refined, how do we update those values? Well, we have two wonderful tools to help us with this, the WIP revaluation and the inventory revaluation tool. So let's just take a quick peek at those slides, Jacques. The WIP revaluation is found within the production control module, and this allows us to modify work center rates and or resource rates and update the value in WIP with the new rates, as well as backwrite to the key master files where those rates are defined. So this gives us the ability not just to set a new rate and say all transactions from this date will now be at X dollars. We can actually revalue so that the rates are reflected in all of our open jobs. This becomes a very important tool as it relates to year-end and for those who are somewhat project-oriented that want to ensure they have no unabsorbed costs at the end of any accounting period. Next slide, Jacques. Inventory valuation analysis. This option is found under inventory control and follows a very similar structure to the tools that we've seen or that I've highlighted so far in terms of inventory activity, purchase price, manufacturing, analysis tools. They all have a similar structure. And the foundation, again, all boils back to well-defined items. The key here is pulling together like with like so that we can start understanding the trends and pinpointing problem children. This tool allows us for a defined period of time to clearly understand how we're performing against some of these benchmarks, highlight them, look to see if they're anomalies or if we're actually having a performance trend issue that we need to have some corrective action on. Some of it may be just bad assumptions, and we need to get that inventory revalued. This tool will allow us to do that, provides history of the fact we've done it, and performs it through a cost adjustment engine so that we are preserving the integrity of the dates on the inventory to maintain a good analysis of our aged inventory. Very powerful analysis tool. Next slide, Jacques, please. Well, here we are at the end of the session. And I hope now that you can see that all roads actually do lead to inventory. And it begins with a clear definition. Everything we've talked about this afternoon so far has always gone back to how we've defined our hierarchy and classified those items. Ensuring we track what matters. Each step in our process will determine where we need control and where we need to have those checkpoints so that we can ensure we've got the data we need to measure, monitor, and value. I can't thank you enough for your attendance. It was my pleasure to share this hour with you on a topic that's near and dear to my heart, and I hope it provided you with some insights and considerations for your organization. Jacques, I'm going to hand this over to you.
Okay, well, thank you, Eva, for this excellent information-packed overview of handling inventory control and costing in Industrios. I also hope you've all found this beneficial. Of course, over here at Industrios, we're aware that for many manufacturers, not just those running Industrios, but for a lot of you out there, absorbing material and knowledge when it comes to ERP systems and using them to track and cost inventory, all of this can seem a little bit like drinking out of a fire hose at times. And we believe companies should be expecting some spillage when there's knowledge transfer as you start using a system. And so to address this, we have a program at Industrials called the Invisible Factory. And the Invisible Factory includes elements like periodic refresher training, maybe some coaching and or some monitoring. So one of the things I'd like to do right now, if I could, I'd like to launch a poll question and just get your feedback on all of this. So this first question is a multiple choice, multiple answer question. You're going to see the question in a second. I'm going to read it out loud. So in which of these areas do you feel you or your staff could benefit from either periodic refresher training, mentoring, or coaching? Okay. So once again, this is a multiple choice, multiple answer type question. So please feel free to submit your answers. I'm going to leave this open a little bit more. I can see that responses are coming in gradually here. So, so very interesting. It looks like things might be slowing down a little bit, so I'm going to leave it open for a few more seconds. I'm going to count down and close in 5, 4, 3, 2, 1, and so I'm going to close this poll, and I'm going to choose to share this. Of course, we're grateful for your responses here, but as you can see, there's interest. It's kind of it's kind of well spread out over the four answers, or the main answers. Of course, operational reporting for inventory, what to review and when, seems to be a topic of common interest. So anyways, just thought I'd share that. Thanks again for your feedback. Okay, so it is 1:57. We're almost at the end of our time slot here. I'm just going to look quickly at the questions that have been logged. Okay, so somehow I probably need to pull this. Okay, so there's a few questions here. When considering reorder of items, does the new version take into account blanket orders? So there's an additional comment right now. If we have a blanket order in the system, it will not tell us when to release the blanket or resupply our supply. So does the new version tell us when to reorder based on quantity on hand? Eva?
Yes, so in the update, a couple of exciting things as it relates to blankets. We have the ability to have a true blanket purchase order on the procurement side that functions in a similar manner to the blanket on the sales order side. That both of those now have the capability to be seen by MRP, controlled by the order type definition. So that's a very strong plus. And on the requisition side, so if I'm on the supply side of the house, when the requisitions are triggered, it will indicate that there's a blanket, and we can now trigger that release against a blanket. So that functionality is quite strong now on supply and demand side related to blanket management.
Okay, good. Thanks for that, Eva. Hopefully that answers the question. Another question here from another attendee. Can safety stock levels be set up for specific customers?
The current configuration is at the location level itself. as opposed to customer specific. The only way to manage that currently would be to have segregated bins for the customer level. It would be interesting, Jacques, to whoever asked that question. I wouldn't mind corresponding with them to just get some insight on that as to how they're physically managing that segregation of inventory. So we could have a bit of a brainstorming session.
Yep. Okay. Well, we'll make sure we do have the origin of the question, so we'll be sure to follow up with you. One last question. I realize it's 2 o'clock already. I want to do a couple of things. So one last question is, what do I need to do to implement gauges? So to implement the gauges that you saw, there's a product called PlantGauge, and it's available in the very last release of version 3.6 of Industrios. So that's all you have to do is basically update to the last version of Industrios, and you'll be in a position to take advantage of PlantGauge. So I'm going to terminate this question period right now. Just one last thing as just before we part here. This is basically a look at in the Industrios online events for 2017, either past, present, or future. Okay, so we kicked off the year with an Invisible Factory webinar. Then we had the first 2 of a series of 4 on how to use Industrios to tackle different processes within your organization. So we started off with order to cash on May 3rd. Then on June 14, we had handling procure to pay processes. Of course, today, August 23rd, we're doing inventory control, or we did inventory control and costing. And then the last in this series is on December 13, and is the topic will be the plan to production process. Sandwiched in between those events on October 25th, we've got an event planned that's going to be entitled Employee Engagement using PlantGauge. So I see that there's a number of you still on, so I'm going to run one last poll question before we part, if I may. So, and again, this is a multiple choice, multiple answer question, and it reads as follows: which of these events do you have, or would you have interest in either attending or viewing a recording of? So if you wouldn't mind giving us your feedback here, and we'll make sure that either we get these recording links to you, or that we make sure that you get invitations in the future for future events. So if you wouldn't mind giving us feedback there, that would be excellent. It's always good information to hear from you as to what the topics are that are most interest to you, our customers. So the answers have stopped or slowed down anyway, so you have a last chance to submit an answer, and I'm going to close this poll in 5, 4, 3, 2, 1, and closing the poll. So thank you so much for your feedback there. In closing, basically you have our contact information on screen. We do hope you found this session beneficial. Thank you for attending. We look forward to hearing from you or speaking to you shortly. And that concludes our session. Happy manufacturing, everybody.